I think what's selling right now, the majority of it is liquidations. You have an unprecedented number of new ways of of getting liquidated. We didn't have very many perps in the crypto space 4 years ago, and now you got hyperliquid. You've got all these other vehicles where you can go, and you got exchanges where you could do. Well, I guess you had some 4 years ago, but BitMEX was the first one that did 100x leverage. But you have more people using those and using trading bots, et cetera, among retail. And, a lot of them think, they make some money. They think they're too smart for the room, and they go in, irresponsibly long or short, and they get liquidated. And so I say liquidations. You can see the size of the numbers. That's where a lot of the selling is. I wouldn't say most of it, but.
Last time we talked, it was at around, if I remember correctly, about 60K. And you said we were going lower.
That's correct. That was when it was just you and me in Hong Kong. Yeah. And it was at 60K. It came close to the bottom, but because we have a few things have been consistent across every bottom. And for February to have been the bottom, like Michael Saylor says it probably is, would mean that the majority of things have changed. And usually every cycle, one or two things change, but when the majority change, then you have to really wonder about the cycle overall. And I don't think the majority of things have changed, because every cycle so far, the bottom has taken roughly a year. 4 years ago, it was 1 year to the day. 4 years before that was 3 days off of the year. And the first halving, it was 1 year plus a couple of weeks. For it to all of a sudden be over in 12 weeks doesn't seem to make a lot of sense. That's time-based capitulation usually is necessary for some of the weak hands, but not perhaps paper hands, to finally give up and say, this is not for me. Or for them to bet in the wrong direction because they're not experienced traders and get liquidated. Usually a lot of traders, the first time that they try derivatives, get wiped out. And so the other one is a number of statistics that, just technical statistics that all point toward an October low. One of them is coin days burned or destroyed. That says it's going to be around 42,000 at the bottom. That's been right every other time. And then another one is months after the initial high that kicked off the bull market. So just like we've had 3 times in a row now that from bottom to top, it was 35 months. It was within days, right, of the bottom and then the bubble popping. Similarly, there have been twice in a row where from the initial all-time high to the capitulation was 23 months. 23 months would also put us on October. The only question mark here is whether you count the initial all-time high before the halving, when the ETFs, popped us over the 21 high in 24 because of all this pent-up demand. We went to 73,850, and then we went down at the halving. And I talked about this in my book. I thought that you can't have a new all-time high for this cycle a month before the halving, because that's last cycle. And typically every Bitcoin summer is when you have your first new high, all-time high, and then things just take off like a rocket ship. And in this case, it went down to the halving. And where it took off like a rocket ship was when you then hit 73,850 again in November. So here's the interesting thing. Because we never tested this before, because it's the first time we ever had a new all-time high before halving, if the 23 months is starting at that ETF month, then 23 months was February. And that matches to where we ended up having the first 60K low. So, I've been saying consistently that I thought it was about, 70% chance that the bottom was not in yet. Today we actually had the first day we tipped up to 83. I think it's a good opportunity to short. My fund is doing that. But, we're certainly, I'd say right now it's probably more like a 40% chance that the bottom was in, and we're headed up slowly. And so if that's the case, we've got some hedging to go the other direction. We're pretty confident about 2-to-1 odds that we are going lower, and that anything I sell in the 80s I can buy back in the 60s to perhaps the 50s. I don't think right now, the only thing that's changed since February is I don't think we're going to probably go below 40. I think that the buying of STRC is really and the ETFs has really been providing a little bit of a cushion to mean that we don't drop quite as low. And every halving cycle, you've had diminishing returns and you've also had diminishing losses. And this was certainly the lowest of the diminishing returns. It was barely 2x. I thought it'd be 3x with neutral macro. And then I was expecting that we'd be down about maybe 66%. And so far, we've only been down like 54, I think, or something for the 60K from 126. So I think we'll still get down a bit below 60, but it wouldn't surprise me if it goes down to like somewhere between, say, 48 and 55, maybe even 57. As long as it goes below that sort of like 60K mark in February and touches the 200-week moving average, then I feel like the cycle's still intact.